Good afternoon. Today is Friday and it's March the first trading day for the new month. And overnight, we have quite a bit of volatility in markets. We can see that between equity markets, currency markets, as well as commodity markets, they all seem to move all at the same time. And that also extends to cryptocurrencies. And of course, that was basically on the back of last night's release of the personal consumption expenditure, the PCE numbers, which came in largely within expectation, but the market reaction was a bit outsized because it shows that generally the trend towards inflation is definitely coming down. But compared to, let's say, 2 weeks ago, we have the CPI numbers. This reaction is the exact opposite, okay? Because 2 weeks ago, when we saw the CPI numbers released, the number came in hotter than expected. The market actually sold off rather aggressively. And overnight, we can see that the PCE number came in within expectation, and the market rallied very, very sharply. So we have almost the same set of data sets pointing to the same group of statistics, but we have exact opposite reaction. So anyway, the Dow Jones has recovered from the low so far at 38,738.96, and it is geared to resume its rally possibly next week. Okay, today we have the release of the PMI numbers, the manufacturing PMI. So that could be another catalyst for the market to go higher, because we have seen manufacturing has been recovering very steadily. Unless the number came in below expectation, this rally that we see in equity market is likely to last through the weekend. So near-term target is 39,500 if the market can actually clear 39,285.17, which is the all-time high for now. And in the S&P 500, S&P 500 did not quite have an all-time high last night, but it was close. The high remains at 5,110.75. But in the S&P 500, the risk is still for a pullback. If a pullback actually materialized, the midpoint of 4,944 to 5,110 at 5,020 could be a midterm point in which the market may pull back to. But generally speaking, the market wants to go higher, whether it goes higher immediately as the market opens tonight, or the market experiences a pullback before it rally. Anyway, the target is at 5,188 in the S&P 500. In the Nasdaq 100, I think the market is getting ready to rally. There may not be any kind of meaningful pullback. I think the market risk is for the market to take out the 18,096.45. By the way, on a close basis, the Nasdaq 100 actually has the highest close so far last night. So immediate target is about 18,280 levels. So do watch out for continued rise in equity markets in the States. And as far as the Asia is concerned, this morning, Nikkei have a big move. Market moved almost 2% today, and it's currently trading just under the 40,000 points. And I think the immediate target is for a continuation of this rally towards the 40,500. So again, all equity markets looks very, very strong. Even in Hong Kong, when the market actually have a negative reaction this morning, traded to a low of 16,133.5. The recovery since that at midday appears to suggest that we're going to see a higher closing tonight in the Hang Seng, possibly above the 16,886.5, and that will complete this entire rally from the mid-January low. So we can see that this is actually benefiting all equity markets across the globe. In the dollar itself, you can see dollar actually rose last night, but dollar has a volatile session. It first dipped before it rallied. So I think the overall trend suggests that the corrective pullback from 104.85 somewhat doesn't look convincing. I think there is still a risk that the market may still go down. If that's the case, I think the area between 102.70 to 102.90 seems to be a good area to pick up some more long position. So overall, the dollar still wants to go higher. So I think it's best that the market come back down to a much manageable level before we actually load up on long dollar position, in which I think I am prepared to do. And in the euro dollars has a somewhat controversial call here, because if I'm calling for the dollar to come down, obviously we have the euro dollar that have to go higher. Right now, it seems that the fundamental does not justify a higher euro dollar rate, but based on technical and its inverse relationship with the dollar, that will also mean that, at least for now, the rally that we see in the middle of February is trying to extend higher, ideally in the three-wave rally targeting 110. Okay. The sterling actually came off last night. It was again not a very conclusive what we call that call out, because if I'm calling for euro dollar to rally, obviously there could be a spillover effect on the sterling, but structurally speaking, I will lean towards either neutral towards bias to the downside, purely because the structure suggests that the three-wave rally that we see from 125.18 is already complete. We have a almost textbook recovery of a three-wave rally before the market comes off. So if that being the case, further losses could be in the cut for sterling versus the dollar. Aussie dollars is getting ready to rally. I think the three-wave rally is very, very clear in the Aussie market. I will be taking a more aggressive approach to actually buy the Aussie, because I think there's a very good chance market may gun for 0.66 half levels. Dollar Canadian likely to pull back a little bit, but generally speaking, I think the rally that we see from 131.76 is likely to extend higher towards the 137 levels. So I think it's still a buy, but you probably have to buy at much higher prices with a higher risk reward. With less than ideal risk reward ratio. Okay. Dollar yen does appear to have some strength left. The bottom last hour was 149.19. I think the market has a reversal pattern here on a 4 hours time frame. So by and large, despite the fear of a Bank of Japan intervention, this market appears to be wanting to go higher. There's a good chance the market will go and test the 150, 190 levels. But anything beyond that is up in the air. Okay. Gold is very interesting. Gold actually have a very, very solid rally last night, and that being the case, I think there's a very solid case for calling for a bottom in the gold itself. I think from here onwards, prices of gold is definitely going to go higher. So every pullback, every dip is definitely looking for levels to buy. So generally, I have turned very bullish on precious metal complex as a whole. So gold is definitely one of them. So immediate target, if this market has very little pullback, I think it's going to gun for $2,080 to $2,090 to challenge this swing high that we see here in the just before Christmas. Okay. And in the silver also looks like it's gonna rally. The three-wave rally here possibly will see silver prices at $23.80 very, very shortly. So again, everything in the precious metal complex looks to be a buy right now. Okay, and in oil despite consolidating under the $80 per barrel, structurally speaking, maybe gearing to go higher. If the market can convincingly clear the $80 per barrel, I think it's definitely going to go for $82.80, if not at a bare minimum, $81.90. Bitcoin, after rallying to 64,300 thereabouts, now is coming under a bit of a profit taking, and this profit taking may actually see Bitcoin prices going back to somewhere between 56,200 to 56,700 range. If you are still bullish on Bitcoin, which you should, then I think this could be a much better level to pick up some more long position going into the halving event, which is likely to happen in the second half of April. Okay, so this is all I have for you tonight. Like I said, we're going to be expecting the manufacturing PMI numbers from the States, and this could be another volatile night because this is also a major number to watch. In the meantime, you take care, and I'll come back to you next Monday. And in the meantime, you have a great weekend ahead. Bye-bye.